What's going on, guys? So today I'm going to be bringing you a short little video on market structure. So if you don't understand what market structure is basically when price is making higher highs and when it's making higher lows and when it's also making lower lows and lower highs. So if you don't understand what those concepts mean, let's just take this, and when you see an uptrend in a market, this is usually what you see. You never see it break a certain point. So for example, if you see right here, it never came back to this low, right? And then this low never came back to this low, and then this low never came back to this low right here. But then you saw right here, price came down, went up, and then broke this low, right? Oh, didn't mean to do that. Came up and then came down and broke this low right here. And this right here was a break of market structure. So let me get this tool out right here so I can type it for you guys. I think it's right here. Right here. So right here, this right here will be a higher high. And the reason it's a higher high is because price right now is overall in an uptrend. As you can see, it's in this overall uptrend and is making a high, comes down, and then price then breaks this high to make another high before coming down to retrace to then go back up and then create another higher high up here. And this is basic market structure of an uptrend. And the same thing goes for lower low. So right here would be a higher low, this will be a higher low, and then right here will be a lower low, right? No, this is a lower low right here. This is lower low. I didn't even mean higher low. Now this is a higher low. This is a higher high. This is a higher low also. My bad. You get them confused. Higher low. Then this is a higher high. But then right here, where market structure then broke this low right here and broke this low right here, this was a break of market structure. So now this right here, we would have no longer been looking for uptrend, even though price in this occasion did keep going. But just for example's sake, because most of the time it's not going to be like this, right here would be a lower low. And the reason it's a lower low is because price broke all these lows after making higher highs to then make a low. And usually in this occasion, we would then anticipate price to make a higher low right here. And this is a higher low. Let's get this tool. This would be a higher low. Why? Because this is higher than this price, but it's still lower than this overall higher high. So we're still keeping that downtrend overall. So let's move on to another example to where it's actually working in our favor. Market structure is simple. It's just you just gotta learn to read the trend. That's all it really is. I know you guys have most likely heard the term follow the trend. Trend is your friend. And this is where market structure comes in hand. Let's go on to a even lower time frame. Let's go right here. Let's just look at this example. So the example we're gonna look at right here, right here, right here, this low, and then this high. So in this situation, let's do this. In this situation right here, this would be a lower low, right? This would be a higher low because we're still keeping this uptrend. This is a lower low. Now it's becoming a higher low because this is higher than this low right here. So we're keeping this uptrend right now. And then what happens afterwards? We then come up to this and make a higher high. We're not gonna worry about all this. Don't worry about nothing. The only things we're looking at are all these right here. And right here, we did it again. Higher low. This is basic uptrend right here. This is basic, what would you call it? Basic market structure of an uptrend. So as you can see, these lows are being respected. These lows are being respected. So we're keeping this uptrend overall. So we came up, retraced, came back up, had a retracement, I'm going to say this was consolidation, but then we came back down, but we still respected these lows. So overall, we would still be looking for longs in this situation. So say you could pull your fib now from here to this high. In this case, it wasn't a fib. It retraced a little bit more than we would have wanted to. It was 100% retracement. But for this example, we're just going to be looking at the overall market structure and what's going on. Then up here, we came and we made another higher high. Why? Because we then broke these highs and continued this uptrend overall. So that's example of higher high market structure in an uptrend. So we're going to look at an example of lower lows right here. So right here, this high, we're going to be looking at this higher low, lower high, my bad. You get confused, but I understand what I mean by it. It's just I'm trying to explain it to you guys. And then we'll say this is a lot of consolidation, so I'll just say right here and then right here. So in this case, right here, this would be a lower high in this case for this uptrend right here. Why? Because price was pushing, it pushed up, had a retracement, but it was never breaking these lows. It stood above it, so that means we kept the uptrend overall, so we were in a buyer's market. But then what happened? Price came up, made a higher high, and then what did it do again? It came down, made a lower low right here. I'm gonna mark this up for you. Let's move this down here. I'm gonna move this right here. So we made a lower low. Then what did we do? We had a retracement up, which made a higher high in this, a lower high. We made a lower high. And then we came down, pushed, broke this lower low. So we were still in this downtrend. So when we're breaking lows, we're in a downtrend. It's just simple as that. When we're breaking highs, we're in an uptrend. So we came down, made another lower low down here. We had a retracement. Price then had a small push. And what did that make? This would be another lower high. And then we had a lower high right here. Then price then started to push down and keep pushing to make another lower low. And then this is when we started to break market structure. So right here, when we broke market structure is when we broke this high as of right here, and we broke this high as of right here. So then this is no longer in this downtrend no more. Why? Because we're no longer making lower lows and lower highs. Why? What are we making? We're making higher highs and higher lows. So this market is no longer a seller's market. It turned into a buyer's market. So then I'm going to show you another example over here. We had this higher high, came down, we made a lower low, came up, we never broke the high, but we closed above. So I would still count this as a higher high because it didn't break the candle's high, but it closed higher than this previous body candle. We came down, made a lower low. And why is it a lower low? Because it's respecting this. And it didn't respect the body, but as you can see, the next candle formed above, pushing it back up. And in this case, this is more of a consolidation. So this is why you don't trade consolidation, because it's hard to tell the trend of the market, right? So you can see right here, I'm going to use the arrow so you guys could understand. We had this higher high from this overall trend, came down, made a lower low. Price then pushed up, broke above this body candle, made a higher high, came down, respected this low, making a lower high, came up. But see how in this scenario it didn't close above here? So now it's in this consolidation range. It made a higher low, so now it's technically in a short-term seller's market because it's not making highs. But look, it came down, but it also respected this low as of right here. So this is why you don't like to trade consolidation unless you're trying to trade the breakout of it, because it's hard to basically identify what the trend you're trading in and what direction the market is trying to move in. And then as you can see, price then came up, made a higher high because why? It broke this high right here. It didn't break this high. It broke this short-term high. Broke that, came down, but it broke this low. So this is why in consolidation, you just don't want to trade it. So we're just going to X this out right here because nobody wants to trade consolidation. You want to trade clear trends. That's where you're going to make the most money and you're going to make the easiest money. So let's look at these examples. We had this higher high, lower high, lower low, lower low, high, we made a high, and then we made another low. So let's just use these examples right here. We're going to look at this right here. We have a higher high, but then what happens after? We come down, price then it comes down, retraces, makes a higher low. Why is it a higher low? Because price is still respecting this trend right here. This high was never broken, anticipating price could still possibly come down. So then what happened? Price came down, made a lower low all the way down here, made a lower low. So we're no longer in that uptrend of the market. Why? Because if you look, we were in this uptrend this whole time. And then what happened afterwards? Price then broke these lows, breaking market structure of this uptrend and now creating a downtrend. And then what happened after it made a lower low? Price then retraced and made a higher low. And why is it a higher low? Because we had a higher low right here, made a lower low, we came up, we still respected this high up here, but it's also still a low of this overall trend. So you see we're still in this downtrend. We came, made a higher low right here, and then came again, broke this low right here, keeping this downtrend, making a lower low again. And then what happened from here? Price came up, made another higher low, but in this case, this is when market structure started to break. We came, made a lower low again, but then came and made a higher high, and then right here is where we broke this high. So this is just a basic example. Market structure is just something everybody should understand. It takes time and practice, but once you understand just the highs and lows being broken, you understand market structure, you understand it becomes easier. So that's why when I mark up things on a daily time frame, the reason I mark up the previous day high and low is because I know overall, if we're in a bullish market, we're gonna want to break the highs, right? If we're in a bullish market, we don't want to break the lows because then it's going to be falling. So when we have a candle, say form like this, say for example, this is Sunday, this is just Sunday, for example, say this is Sunday, the market's closed, I marked up the previous day's highs and low, and since it's bullish, I'm anticipating the next daily candle to then break the high and not the low. And that's why I have a daily bias. I usually mark up the daily highs and lows because look what happened. We then broke the highs. And then what happened right here? Let's just do it again. We have this high of the candle, this high of the candle right here, and this low of the candle. So we're anticipating this next candle to then break the highs and not the lows. And then look, we break the highs once again. But as you can see, we start to lose momentum. Right here, the high of this candle, the low of this candle, the highs are broken. The low is also broken, but you can see in this case the overall push was upwards. Let's do it again. The high of this candle and then the low of this candle. I'm gonna take this one off. Now see, look, we're breaking lows now. We're not breaking the highs. So now this is a bearish daily candle. We're anticipating that the next daily candle could possibly break this low to keep pushing down, right? And if you watch my previous videos, you will understand this is now a daily imbalance. There's an imbalance from here to right here. Why? Because there's a gap. If you look at the two candles, there's a gap in between, and when this happens, the market likely wants to retrace to these areas. So now we know that it's a daily bearish candle with a imbalance right under it. So now we're anticipating the low to be broken. In this case, it looks like it just starts to range, but you guys get the idea of what's going on. Look, price then tries to come down, fills at least half of the imbalance. Bullish candle makes another bullish candle, and we're anticipating the next candle also to be bullish. Yep, just like that. It's simple things that you just always got to keep in mind. That's why I always stress looking at all time frames, because every time frame is going to help you intraday. Mind you, this is the daily time frame, so the overall move of this day was bullish. So if you know the overall move, where it's likely to go, you have a higher chance of taking the right trade that day. So hopefully this video can give you guys a basic example of why market structure is important and how to identify market structure. So I say just back test it, yourself, do exactly what I did. Do it for, I say, a few hours, because I think that's all you really need to really get it down, and then the rest you just have to do it live. A lot of the things that you learn in this market are going to come from live experience and live actual trading. Backtesting can help you with your strategy, but it's not going to give you the experience you're going to need to do it actively live and do it in real time. So hopefully this video is beneficial. I hope you guys backtest it and try it yourself, and I'll see you guys in the next video.